Good morning, America. Welcome to another edition of the Morning Market Watch with me, Stephen Hode, aka the Stop Hunter. It's about 12:30 over here in the UK, which I reckon is about 7:30 in the morning Eastern time. And the show's all about getting you ready for the day. And we've got a lot to go through since I was last on the screen with you guys about a week or so ago. A lot has happened. We've had US interest rates going up about 0.25%. Maybe it's the last time that they go up this year. Maybe we'll see a few cuts. The wording sort of suggested that they're going to see how it goes. So that to me says there might be still some surprises left in the tank. Depends on what's going on in the rest of the world. And what else has been going on? Well, we had the coronation over here in the UK. That gave us a day off on Monday, but in business terms, this morning we've seen UK interest rates go up again, 0.25% to their highest since 2008, late 2008 that is, anticipating another 0.25% to 0.5% rise still to come. So, it's not quite as rosy a picture over here that it is in the States at the moment. And earlier this morning, even earlier still in China, data coming out, bit disappointing really. It's got a feeling of a bit of stagnation in the Chinese economy, and in that respect it's probably going to need some sort of kickstart, some economic stimulus to get it going again. And what else have we seen? Well, we've had more banking trauma. I think it was First Republic. We got through earnings, which was quite encouraging. We had Apple last Thursday, which was okay, but the big tech companies didn't disappoint, and we sort of got through that, and things looking not too bad. Still some downers in the background there on the world stage, and like I just mentioned, China also not helping the cause, and that affects a lot of the commodity markets, which we'll have a look at in a minute. And what else is going on? Well, we've got the G7 finance leaders out in Japan discussing tactics and strategies. So they'll probably come up with some ideas around, call it taking the business away from China. So we'll see how that goes. And, well, let's have a look at what's moving pre-market in the US stocks. Well, the biggest mover this morning is Unity Software, up, just looking at that now, 9.3%. We've got Walt Disney down nearly 6%. Picking out some other names, big ones there. JD.com announced earnings just before the market open today, 3.24% up. Roblox on a recovery, 2.49% up. Rio Tinto, Vodafone, BHP, UK type big companies all down a couple of percent. Alibaba, we talk a bit about that one on the show. What's that doing? Up 2.25%. So bit of movement pre-market, looks a bit mixed ahead of the start. Now, as you know, I deal a lot with technical analysis, and I'm going to give you some insights on a few markets that I'm finding interesting over the last week, and what I think is going to take shape over the next few days to the next week. Remember, I'm on Tuesdays and Thursdays, so we take you through to that next show. So let's take a look at some of those charts now, and we're going to actually start with the CME FedWatch tool. We talked about the interest rates going up. What's going to happen next? Well, you can see there that big blue bar on the left, 92.6% chance of it staying as it is. That's what the market is, you say, pricing in, a non-move next time. You can just see there on the right, very slim chance at the moment that they'll go up another 0.25% to 7.4%. And just showing you what's been going on in the UK in terms of interest rates. For anyone out there interested, a real long-term view, you can see we went through that really quiet 0% patch and then pushed on back up towards the 5%, which was around that 2008, 2009. But as you can see, it's been a lot higher. The decades before, very stable for over 10 years, but now starting to trot up, maybe with a bit more room to maneuver. So what did the US interest rate do to the S&P? Well, actually, you can see the green arrow there. That's the actual day that it happened. And actually it sort of had a bit of a follow-up negative day and then pushed on upwards. And as you can see there, we're up, nearly 8% on the S&P for the year. So it's not doing too badly. And bringing your attention to the below, I like to look what's going on with the VIX volatility. Does the inverse often the price, as you can see, down, S&P up. At the moment, I'd call that sitting in no man's land. It's coming down, which is encouraging for the bullish side, but sitting there in the middle. So, it's more of a 50-50 play at the moment where things are going, but slightly a bit more bullish. Now, what about the US dollar? What's been going on there and the other major currencies? Well, as you can see here, what have we got? Let me just scroll that back in a bit. There you go. It's my messy chart. This is major currencies. What's been going on? Well, the euro, the blue line at the bottom, the weakest. You see the US dollar has also been weak, but since that Chinese data came out this morning, it did strengthen quite a bit off the back of that news. And you can see it's then catching up the pound. And we've got Swiss franc. But the top two commodity-based currencies, New Zealand dollar and Australian dollar. And focusing more closely on the US dollar index, a 3-hour chart with some more short-term action. You can see there was, again, the interest rate increase. You can see that big bar there. Came down, weakened the dollar, which was encouraging. And then since then, it's picked itself up. That's, I would say, more due to Chinese economic data, especially that big bar you see in there this morning, making that US dollar just a bit stronger. Now, if I was looking at a currency pair to be trading at the moment, off the back of all of that lot and that currency strength, like I said, we saw there, with the euro being the weakest and, that US dollar strength, then I would be looking here for maybe the euro to be coming back down. So this is a Renko chart. I like using Renko charts because it just clears out the noise from the price action, makes sometimes the trends a bit more transparent. And we've got the euro strengthening quite a bit over the last, say, 2 months. And then we've got this yellow box that I've drawn in on here, which is like a support zone. It's 1.09 in terms of the currency rate there. But we're just seeing this block here breaking down at the moment off that new strength in the dollar. So maybe a target of this next Fibonacci line, 1.0855, or even down to 107872. Now, for those that don't know, the euro versus the US dollar is the world's biggest currency. Of all those trillions traded every day, this is the big boy of the lot, the most active, the most liquid. So it's an interesting one to trade. You can trade it futures, in the States or the spot. And looking at this sort of, big pattern we've got going on here, it looks to me just bearish into this space. So something to watch there for, you FX traders out there. And what we haven't really spoken much about over the last few weeks is Bitcoin. It's gone very quiet, and that's maybe because the fun of trading crypto is not quite as easy and lucrative as it used to be. And this is the weekly chart for Bitcoin, and as you can see, quite clearly we've had that big runoff and then support around the 19,250, 19,500 area, and we've seen that reasonable bullishness for 2023. We can see that's where the year started. So it has been a good year for Bitcoin, but it's struggling. It's struggling around the 29,000 mark. It did briefly, as you can see there, just pip over into the 30,000 mark, but it just doesn't want to go any higher at the moment. It's been a month or so stuck at this sort of level. The next stage would be 36, 37,000, where you can see a lot of support. That top of that double top pattern, also the bottom of the double top pattern there, creating a lot of noise around that sort of price level if it can get up through there. But looking at that chart at the moment, more likely to come down to 19 and a half, back to where it was, than go up at the moment. And you can see on the right hand side all the volume is also in this sort of price zone there. So always interesting to see one of the other markets. Bitcoin at the moment, again, stagnant, very correlated to the success of the US markets, obviously. Well, and for obvious reasons, I suppose that when you've got more money in the pocket, you invest in more stuff, you go into stocks, you look for more riskier assets like your cryptos. So yeah, watch the economic play there on the future of Bitcoin success, and also some of those stocks around there like your Coinbases, for example. So moving on from currencies, I'm going to bring you into the world of commodities, and one of my favorite markets is WTI crude oil, one I know a lot about, and it has been an interesting one. And if you've been watching me on the shows of the last few weeks, I've been going on about this range bound area right up the top there, between, you can see, between $71 to $83. And earlier in the week, or last week, we touched and broke down from that 71 area. I was thinking there's more downside to come, which would have seen it moving down to sort of the mid 50s, but actually, guess what? It's reversed and just gone back into that pocket, that 71 to 83 zone. And looking at some of that other data right down the bottom, we've got the volatility, similar to the VIX volatility idea. I look to see where it's going. When it's calming down, coming lower, the market, I'm looking for more bullishness in the action. And as you can see, it's coming down. So we've got sort of a bullish volatility play there at the moment. And the last 3 or 4 days have been on the way up. But then we've got some other factors at play right over there on the left. Seasonality, weak bullish at this time of the year. Then it goes pretty flat. And my favorite indicators are the commitment to traders data here. Reminder that it updates on Friday. And you can see the relationship here is if the large speculators are moving down, you'd expect that price above to be moving down. So yes, it is doing that. So we'll watch out this Friday to see if there's an upturn in that to confirm any bullishness. But at the moment, I'm afraid WTI is very neutral. I think there's a bit more demand there, but again, that Chinese factor just hitting the buffers and making people think twice about where the price is going to go next. And we see a bit of short-term action bringing on another Renko chart for WTI crude oil. This is that tight range that I was talking about, and some key price levels downside. We've got 69, then 65, and then upwards we've got 76, 79, and then those highs of 83. And I'm expecting it to stay within that, or just be popping down and going back in, to either side at the moment, unless there's a more definitive direction given on the global stage, like I say, around Chinese demand, that sort of thing. Now, hopping into some other commodities, what have we got for you? Well, we got 3 here, 3 of the more popular ones. We've got gold, platinum, and natural gas. And I've just seen Vivek asking me to share my opinion on natural gas, and we'll get to that in a second. We've got gold. Now, gold is another interesting one. It's been trying to push up on all the negative sentiment, but as you can see, really it's building up in this wedge pattern. Now, if we're using the strict rules of technical analysis, we got this sort of flag pennant-y type shape, and if we were trying to predict where that would go next, we take the length of that flagpole and put it on upwards, which would give us a quite spectacular 2250 number for gold, which seems a long way off at the moment, especially as it can't really get past the magic 2000 barrier and hold it. So one to watch. If it does break, there's some good upside in there, but if it breaks, there's probably a reason for it, and we might be a bit more in trouble in other markets. So platinum is another one I've been watching and trading. Platinum, if you don't know, is obviously used in many things, jewelry, one of them, but that's not the biggest use. It's actually in the auto industry, things like catalytic converters. And supply is a very tricky issue coming out of countries like South Africa. And there's expected to be a shortage this year. And I was anticipating a rise from this point earlier in the year, but actually it sold off support around the 900 mark and has now got back to where it started the year and is looking a bit more encouraging for a more positive move. And a 20% move for the rest of the year, not out of the question. So maybe targeting 1300 on the price. And then to Vivek, who's asking about nat gas. Well, here you go, down a whopping 75%, and then has gone very stale since in this, reducing sort of triangle pattern. Reason being that there's, loads of the stuff about. There's no, unusual weather patterns kicking around to maybe spike the price. Remember, it's a futures market, so these players are anticipating the future usage of nat gas, and because of the storage implications, really it looks very, very quiet at the moment. Key numbers to look out for around this breakout, nearly at 2.5 to at best get back to 3.25, where you can see a bit of noise around there. Downsides back to the lows, 1.9, 1.9.5. It's gone a bit flat and a bit quiet. So unless the storage and the weather changes dramatically, I think we're stuck in this, like I said, this sort of zone price for the short term. Hopefully that answered that for you, Vivek. And I've just got 3 more commodities quickly to go through that I have been following that you might want to consider as well. We've got RBOB gasoline. It's a good seasonal play, and normally come into buying season around now. So look for that break up around 2.5 and pushing back up towards those highs, if not further towards 3. So that's one there. And then 2 soft commodities, cocoa. Well, both if you've got sweet teeth. And then we got cocoa, which has been on a great tear up the year, up 15%. And also on the right there, number 11 sugar, up a good solid 32-33%, and both of those still pushing up. They're available, I believe, on the ICE exchange, not on the CME, but still looking very encouraging there for further moves. Cocoa hopefully can get to that 3,100, 3,150, and sugar up into the 28, 29s sort of area. So that's my brief look at commodities. So let's hit now the world stock markets. We've got this really interesting, another messy line chart that I like to put on. Let's put on the whole of 23, see who is the strongest markets out there. And quite interestingly, at the top there, you couldn't write it, it's the US against the Russians. The NASDAQ 100 up 21% on the year, and the Russian stock exchange, which is heavy in banks and unsurprisingly energy type companies, up just over 20%. So they're duking it out up the top there. And you can see the black covered mark there. That's the S&P that we've talked about already. And we've got some other interesting markets. Japanese fast catching up. They've been struggling for a while, up over 12%. And the German stock market up nearly 9%. So let's have a quick look at the NASDAQ 100. That's, the real, winner this year, in my opinion. And it's still, I think, got a lot of room to maneuver on the upside. Now, I'll put in bold these big key level areas, and the price has been playing out to them. And the downside, we've got 13,000. By the way, ticker here, NQ1. It's the E-mini NASDAQ I'm looking at here. And this stuck level 13,500. That's what it's got to try and break through. We got some noise over there back in August of last year. We got a break on up through. Next area, 14,250, and then highs 15,250. But you can see a lot of volume over here on the right-hand side in this range, 10.5 to 13.5. But I'll be looking for a break up above the 13.5, and then hopefully, like I say, push up into the 14 and 15 thousands. and what we got going on around the world. Just to give you an idea, a bit of a flavour of some other markets. Top left, the FTSE 100 UK gone flat, possibly coming back. We've talked about the Germans, very strong at the moment, still holding strong. Nasdaq 100 we've looked at. Nikkei, the Japanese market, bottom right, also holding strong. And then I'll call this one the domestic US market, the US Russell 2000, quite flat at the moment, sideways ranging, but maybe can break out above this 1780 sort of area and hopefully move on up towards 19,000. And then most interestingly, China. This one's the CM50, and it was tempting the breakout on this time sort of last week, but has pulled back since, like we talked about earlier, the weaker Chinese economic data. And focusing in on a few sectors just to give you an idea of what's warming up and what's not. Top left, cannabis. I know it's popular here on Benzinga, and for the last 4 or 5 days, amazingly, we've started to see some green come back into the chart. Sorry about the pun there, but regulation, I heard, is probably the main reason for it. Talk about relaxing the regulation and expanding the market there. So there's a lot of value in the cannabis sector. You get the right stock to play with. But yeah, it's starting to warm up there. Then in the middle, we've got the energy sector. It's, a picture of oil, what's going on in oil. It's a sideways, reasonably wide ranging type market to play, but stuck in that pattern at the moment. Then a really strong one, top right, we've got the home builders sector, again, been pushing on very strong for April and into May. Bottom right, unsurprisingly, technology, mostly driven by the semiconductors, those big stocks, and then financials, the banking crisis that doesn't seem to go away, but in terms of actual price action, this sector moving sideways. I suppose the fear might have been taken out because if the banks get into trouble, they get bailed out, they get bought by someone. So what's there to worry about? So at the moment, sort of calm down, moving sideways. And lastly, an area again that did try to strengthen, the healthcare sector, again falling into this sort of wedge-shaped pattern and moving sideways. So moving on to my trade of my chart of the day, I'm going to go with Palantir, PLTR, the ticker. Now, last week they knocked out earnings, and that sent the price up 19% pre-market that day. And they mentioned the 2 key letters AI in their chat around the earnings session, and that really encouraged investors. Actually, the quarter period was quite good, actually, in terms of results, which also helped. But as you can see in the long-term picture, it hasn't been quite as good, down 86%, as you can see there, from those highs when it went live-ish of an early 21. And focusing in down into the shorter term, we can see that earnings release there, pushing that price up. The following days followed through, but it's getting stuck at the moment around the $10 mark. We need to see the breakup. And I think looking at the pre-market, it might be up a couple of percent. So it will be testing those highs. So hopefully we can see up to 11.5, sort of 12 area. And to wrap things up, I'm going to do this on a regular basis. 3 stocks I like and 3 I dislike. And we've got in the dislikes first, we got Sirius XM. As you can see, been falling off quite heavily, gone stagnant, looking for this breakout below, down even lower to the 2.5 zone. They're an audio entertainment type company, ticker Siri, not looking great. Now in the middle, we've got JD.com, Chinese internet commerce company. As I mentioned, they had their earnings out, so pre-market they are just above here, but actually fundamentally I'm not so keen on these guys and expecting maybe a move down towards 25. PayPal we're all familiar with. You can see it hasn't been a great 23 so far, being off to a bad start, moving sideways, and then the last few days broken heavily down to the 62 mark, looking for 55, 56 sort of area as the next downside. Now, 3 I like. We've got Shopify, the Canadian onliner. Again, earnings were okay, but the investors liked what they heard and sent the price on up. And it's had a good week's trading, hitting highs around $65, looking then to push on up towards $73, $74. Then in the middle, we've got a company called Verisk Analytics, ticker VRSK. They're a data analytics provider for the insurance industry. Again, had a really good 23 so far, up, we could say, from $170 to $216 in that run up. So a really good run, still looking strong. And in terms of a target to the upside, maybe 216 once it breaks through there, up to that 230 mark there. And finally, AMD. I saw someone asking about AMD in the comments. It's another one that I've really liked trading so far this year. As you can see, up 57% from the beginning of the year. And I still think it's got a long way to go, especially when you compare it to stocks like Nvidia, who really went off up and running and just didn't stop. Their price just went like that, and now is pausing for breath. I think AMD, with this pullback, it's sort of allowed a bit more value investing trading to come back in to hopefully push up through to the highs of $103, $104, and then you're talking $114, $120 as the next upside. So let's wrap that up then and say, well, that's pretty much my thoughts for the day, the start. I'm back next Tuesday for more of the same. Any thoughts and ideas, suggestions, throw them at me in the comments, and I'll happily build that into the show. And hopefully we'll bring on a few guests as well over this side of the pond to talk about what they're seeing in the markets as well. And I think coming up next, we've got the pre-market show. So with that, thank you all very much for watching, and I will catch up with you all again very soon. See you soon.